Alrighty, guys. It is 3:30. Time to wrap it up for today. It is Thursday, January 30th. And look at that squeeze and a half. Man, that was brutal. So we are right up here at the highs at 61.10 again. Ran the stops and then some. And I just got caught myself in a fairly tight stop. I got short here at the very edge, a little run up here, and had a nice little rotation down. Not enough to get me to break even though. And then the freaking guys, look at it, they squeezed it right up here. Not quite high ticked me, but pretty freaking close. And now they're pulling back. So if this keeps going down, I'm going to be so frustrated. Anyway, so that's how it is, right? So up at the edge. I thought the initial stop run here was going to be sufficient for at least a little rotation down, but I guess that was it. That's all I got. So at this point, I've done 3 trades, 1 scratch, 2 losers, and I'm down $50 on that on the ES. So far today, I would start off range bound still. We'll see where they end up closing, but if they close after above this 61.10, we are leaning in on the long side. All right, but if they now back off and come back down to the towards the midpoint again, I'm going to be frustrated because that's going to be like, yeah, that's the trade I was looking for. If they keep going higher, then it's going to be like, oh man, squeeze is still going. But so watch that 61.10. If they close above it and hold, stay on the long side. If they start rotating back down, just go back range bound. So we'll see here. But last trade I took was right here at the initial balance high, and they start pulling back. Nice little pull back on that, but not quite enough to get me to break even. And look at this. If they still keep going down, it's going to be one of those things where I just not quite on the right side of things today. Anyway, news for tomorrow before we keep going. Tomorrow we get the personal income number at 8:30 with the inflation read. We also get employment cost index, and then we have a Chicago PMI at 9:45. So 8:30 is going to be the big news. Inflation read as well, and the market is probably going to react pretty good at that. So what direction, who knows? But it's going to be a reaction to it. All right, so Nasdaq and the bonds. Bond market is pretty much in the range around 1420. So stay on the long side on the bonds until they trade below the 1410, the low of the session, the overnight session. If they start trading below that one, I would definitely look for a retracement to the downside. At this point, I'm just starting off range bound and see if they can make something out of it. In other words, trade back up again. If they trade up above that 24 at 114.24, stay on the long side. Otherwise, I would look for a short against the 24s for rotations back down. And I would look to buy against the 114.10s for rotation back up. So fairly range bound at this point to get started in the overnight. I'll see if they can get something going. But it's been pretty sloppy trading on the bonds today. NASDAQ, I did one more trade on the NASDAQ. I got in on a long trade here at the midpoint. As you see, they're slopping sideways. And finally, they were breaking out a bit. And I did try a long trade. I figured that if you're going to fail, you should have failed by now. So I tried a long trade. Not great trade location. I should have bought it on the lower end of the range, but I just got late on that thing, and so I kind of regretted that entry. It was not great, and I had to sit here through some heat. So when it got back up, I got out of it. They get a little bit higher, then right back down again, and then the big run happened. So probably a good call to get out of that trade. An entry like that that's just stupid. So if you find yourself doing that, don't do it. It's easy enough to do it because you're watching it. It looked like it's breaking out, and then they just kind of headed just a little bit higher, and then they back off. And if you're thinking long side of the market, wait for it to rotate back down. Looks like it's going to take it lower, then you buy it. Right? If you're wrong, then it starts heading lower, and you can have a tight stop and get out of it. But if you're doing the breakout thing, it's traded by the upper end of the range like that, you have nowhere to go. And so I keep catching myself doing it. And at this point, I just kind of got out of it. So I'm not going to sit through that and try to be cute about it. So at this point, 6 round turns on the NASDAQ, 1-2 contract trade. I could not make anything back out of that rundown I had this morning when I got knocked down. So I'm down 230 on those. Finally, oil and gold is holding on. Look at that thing. That's melting up is what it's doing. up to 28.50 holding. So far they're kind of dying off, but we rolled to the new expiration today and the market just straight out from there. So up to 28.50, traded from the long side of the market. We're going to have to readjust the levels here and put in new levels because they kind of blew through everything. This is in price discovery territory to the upside right now on gold. So move out of the middle to the upside on gold, trade it as such. No reason to be aggressive on the short side yet. All right. Oil has kind of been a sloppy trading day. It hasn't done much at all, and yes, it faked out on the upside and never the short side never developed. So staying range bound. I'm still thinking short side of the market as a net effect. So range bound or bias to the downside. So I would prefer to sell strength. It would be my favorite trade on oil for at least the time being. Until they backed off sufficiently to find a new price point based on the new policies. All right, so that's oil and gold. Back to the ES, and well, look at that. If they so far see if this pullback to the tab is going to hold or not. But I'm done trading it. I can't finding myself on exactly the wrong side of stuff today, so I'm just not going to be re-engaging it. Anyway, we'll leave it at that. So now they're heading lower. Look at that. Ah, all right. We'll see you guys bright and early in the morning. We'll go at this again. Look at that move right there. That's the trade I was looking for right there. And I was a few ticks shy of being in it. Look at that thing right there. There it is. Okay. I'll see you back tomorrow. Later.